Hello everyone. Hope everyone's doing all right. Let me know in the chats if you can hear me, guys. Let me know in the chats, please. So we can start as soon as possible. Do you guys can hear me? Please let me know. Awesome, guys. Welcome. Welcome to today live stream. Always a pleasure to be here with you guys. Uh, nice weather in the market today. Well, not only today, but on the last days as well. Good to see Bitcoin above 100K once again. It's a pleasure to be here with you guys. Let's wait a couple seconds, minutes more for a bit more people to join. Pretty quick. Okay, it seems that it has been announced, so we should be good to go now. Yeah, it's been announced now. That's good. So how's everyone? How's everyone doing? Is your portfolios already up or not yet? Let me know in the chats. Good, Tyler. Welcome everyone. Awesome, guys. Awesome to see your portfolio is doing good. Okay, so let's start. Let's start with today live stream. Today is a monthly educational recap. That means that we're going to go through a top-down analysis of all of the methodologies and all of the tools that I have shared with you guys. Okay. In order to do this, I would like you guys to write on the chat which asset do you want me to screen. Okay, because I know you might be tired of me screening only Bitcoin, and it's not only because I screen Bitcoin, but also because it's Bitcoin, you know. But I will go through the most voted asset. Just let me know in the chats and I will go. Please don't make it any shitcoin or meme coin, low liquidity cap coin, because the price action there is useless. Okay, so let's ETH, SUI, Sol, ETH, Sol. So ETH and Sol are winning here. We need another vote, guys. Okay, ETH dot and SUI just have one. So I think it is. Okay, let's do with Ethereum, and that's nice because I was about to screen Ethereum, to be honest. Okay, let's do Ethereum. All right. So I normally start everything from the weekly chart. Okay. Let me turn this off. Okay, so from my first live stream, okay, I showed you guys how to look for the trends. Okay, this doesn't mean that we're going to go and do all the trends that happened previously, but the most important thing is to understand what is happening right now. Okay, right now, or maximum through like the previous weeks or so. All right. So that's the most important thing to actually care about, because I'm not going to analyze what happening on a weekly basis, like over here, or see the trend over here, whatever. I don't care about that, because basically that price action is not relevant anymore. Okay. So as we can see here, this was the previous, sorry guys, okay, this was the previous lower low. Okay, this we had a failed action over here, one candle breaking above, the second candle closing below the one candle that closed above, and then the next one confirming that it was a failed action. But then we don't have a failed action over here. So after this candle, this became the new higher high, and this became the new higher low. But this higher low was broken over here. Okay, trend was over here. Then we have a new higher high over here, higher low, lower low over here, lower low over here, and then new lower low over here. Okay, so basically this is our current lower low for the weekly chart on Ethereum. All right, let me change this to weekly lower low, and we are going to dissect this chart. All right, Ethereum, so we can know what's the trend for Ethereum. And the previous lower high is the last bullish candle before this move happened. Okay, so now Ethereum is trading above this level, which is a good sign. Okay, weekly lower high over here, and I want this to be on the 30-minute as well, and this on the 30-minute as well. Okay, perfect. And the previous level to take into consideration is also this one. Okay, this was the previous weekly lower low. I always highlight just the two previous levels, okay, to see where I'm standing in the trend. All right, this was the previous weekly lower high. Okay, so clearly we can see that the overall weekly bias on Ethereum, it's bearish. Okay, so our weekly bias bearish. Okay, now what do we need for it to turn bullish? We need this weekly candle to close above 2067 and another weekly candle to confirm such a scenario, because this can easily turn into a failed action, and that means that basically we can see something like this and then the market keeps declining, right? But in order to confirm this from a weekly perspective, okay, we need two bullish candles over here. All right, but overall right now, the Ethereum chart is bearish until proven otherwise. Okay, that's extremely important. Now, in order to, let me put this in all charts. Okay, now to put into consideration the volume profile teachings, okay, I now need to understand what does these levels represent. Okay, this level over here is not only a weekly lower high, but it's also a low volume node. Right? What do I want to know this? This is a low volume node, clearly low volume node. All right. Why do I want to know this? Because this way I can be sure of two certain ways of how the market can react. It can either break above it and continue to the upside, okay, or it can reject this level because it's a low volume node, right? So I'm going to do the same for each one of these levels. This is also a low volume node. This one over here is also a low volume node. And this one is also a low volume node. That's good because we have clear boundaries of where the market can go, okay? Eventually, when the market breaks out, we're going to have new levels, right? But for now, this is what we have. We had a failed auction over here on the weekly chart. Okay, that's also important to highlight. Why? Because if I turn, okay, yeah, this is a failed auction. And now from the previous teachings, using the periodic volume profile, remember guys, from one period, because I want to see where was the most volume concentrated at certain price level. Okay, you can see that this candle over here, the one that I'm highlighting, it's a failed auction because it tried to close below the previous lower low and then it wasn't able, and then it closed above. And not only that, but the wick is showing absorption, meaning that a lot of traders got trapped in this move down. And not only that, but also this is a high relative volume candle. Okay, high relative volume is a new tool that I'm going to introduce to you guys today. Okay, but I will fully explain it next week. All right, just for your understanding, volume, relative volume, is a way to measure a specific volume in a specific time, especially for candles, right? Where volume is above or below certain standard deviation. Okay, remember guys, I taught you about standard deviations. All right, this is it. Because any candle that it's above 1.5, 2.5, or 3.5 above a standard deviation, okay, a fair value of the previous 300 candles, or the previous 50 candles, okay, it's going to be highlighted. And normally, as you can see, these candles usually highlight the ends of moves, okay, ends of the moves, or real breakouts, like over here, okay, breakouts, breakouts, end of the move, end of the move, and so on. All right, and we have no more like stronger signal when we have this kind of thing, when we have the PVP highlighting absorption, and also this high relative volume candle that it's highlighting a failed action. All right, and what does that mean? That even though the weekly bias, okay, the weekly price structure is bearish, our immediate, all right, our immediate trend was bullish. Why? Because of this candle alone. This candle, what it is representing is that from this range over here, right, we have this range. What this candle represented is that this range price was most likely to go and revisit range highs than it is to keep moving from on range lows. Okay, so that's completely different, guys. Like the overall market, the overall price structure is bearish, right? We can see lower high, lower low, lower high, lower low, right? But our immediate trend, okay, is bullish from a weekly perspective. All right, now we know that, and now we know that it is moving bullish as well. Okay, now we go to the daily chart. Let me put this ones, I don't want to see these ones here. We're moving them, right, only for hours and minutes. Okay, this as well, only for hours. Well, this is only weekly, to be honest. All right, now we're going to do exactly the same analysis for our daily chart. Okay, taking into consideration only the latest price action. All right, so this was the latest lower low over here. This was over here our latest. Okay, so this is our current level, this is our current daily lower high. All right, and this is over here our current daily lower low. All right, from previous levels, okay, this was the previous lower low. This one over here was the previous lower low. Yep, correct. Previous lower low over here. Daily lower low. And we had this one as our previous daily lower high, where the market is basically going right now. All right, and in between these two, we have a zone over here, which is basically highlighting all of this accumulation that happened over there. All right, so our overall price structure for the daily chart remains bearish. You see, lower high, lower low, lower high, lower low. All right, we also had here a failed auction, and this candle is highlighting a possible break of a structure. Now, what do we need? It's another candle closing either above this daily candle or 3 candle closures above the current lower high, which is around 1845. So we are not going to know if the price is going to actually confirm this structure shift until it happens, okay? But the overall sentiment is currently bullish. So even though the bias, the price structure is bearish, I would remain at least sideline it for shorts, right? Because I'm currently in the markets with what Trump has said, with everything that the markets have shared as well. The current momentum is extremely bullish. Okay, guys. So I would stay sidelined for shorts, instead looking for longs, anticipating this possible shift on price structure, right? But the overall, we know that the price structure is currently bearish for Ethereum. Okay. Hello, Ready. Hope you're doing fine. Okay. Now we will activate the visible range volume profile because I want to know what does these levels actually are. All right. For this, we know that this level over here, it's also a low volume node, so it's very likely to reject price. All right. This over here, this zone over here, to be honest, is the high volume node, and it can be considered actually a point of control. Every high volume node is a point of control. Okay. Why is that? Because basically that's where most of the volume was traded, and we can clearly see that on this price, on this range in price action. Okay, so yeah, I will not be surprised if the market just continues up and eventually it comes down to test this level once again and confirm the bullish trend. All right, is it going to happen today? No, it's not going to happen today. But at the end of the day, that's how it works. Markets always give retracements. All right, now let me erase this. Okay. Now we have this. Perfect. Now, what I want to know is, you see, this is very likely to be a high relative volume candle. The failed action candle as well. Nice confluence over there. And for the PVP, yeah, this is not as accurate, possibly in exo charts with a real footprint chart. The overall point of control would have been on the week, okay? But overall, what we are seeing for the daily chart is that even though the price structure is bearish, we have an immediate bullish sentiment. Okay, extremely important to notice. Now we're going to go to the 4-hour chart. Okay, and as you can see, everything starts to align over here. Everything starts aligning, and you're going to see these levels working as a charm on every single time frame. Okay, for this time frame, we are also going to highlight our intra-week levels. You can use the 12-hour chart, or you can use the 4-hour chart. To be honest, I prefer the 4-hour, and you're going to have the same structure there. Really nothing changes between the 4 and the 12 hours. Sometimes, okay, sometimes they do, sometimes they don't. As far as I can tell, right now we are having these. Let me check from the daily perspective. Oh, we have a small zone over here that we're going to also put it on the hourly chart. Okay, and now we go back to the 4-hour. And the 4-hour chart, what it is telling me right now, by taking all of the indicators right now, okay, is that we are bullish, strongly bullish, okay, because this over here is the current, this level over here is the current intra-week higher low, okay. And the current candle right now, well, until this candle closes, I'm not taking any conclusions. Okay, but overall, this is our current intra-week high. We're going to send this to minute charts as well. Awesome. Okay, now I'm going to erase this zone. As you can see, we have two zones over here. This one from the daily B levels and also from the intro week. Okay, so what I'm going to do is join these two zones. Okay, so now we have this area of interest for our future trades. Okay, we have that area of interest for our future trades. And now what we're going to do is also activate the visible range volume profile to see what the intra-week zones actually are. Are they low volume nodes, high volume nodes? I can see that this one is a low volume node, right? And this one over here can be considered a high volume node. Okay, so now if we go to the 30-minute chart, we are going to clearly see where the market is likely to react. Okay, as you can see, we draw this level. You see, guys, I think this is a weekly level. Yeah, this is a weekly lower high. And now you can clearly see how the market reacted to this level. You can see that on the weekly chart, but on lower time frames, you are going to see it. And it's almost to the T. Yeah, because of the current price action, it broke out, right? But in a bearish scenario, something like this would have been a perfect opportunity for a short, right? I'm not going to short because of the current market momentum, okay? But overall, that's what it is. Now, if we have a look, okay, we have here the daily chart, right? Moving extremely bullish. We are going to leave this zone on the daily chart as it is. I want this only on the daily. All right, now we have the 4-hour chart over here showing us the interest zone, which is around here. Okay, it is around here where the most. I'm going to highlight this level, 4 minutes and daily. Okay, and now that we have our levels, okay, we start analyzing. All right, what happened over here? What happened over here? Because right now there's no trade on Ethereum. Okay, where are you going to place a trade here? You're going to go long here, and your stop loss is going to be below this, right? You can use this on the daily or possibly on the weekly chart, but for now I wouldn't FOMO in, to be honest. Okay, so now that we have this, what we're going to analyze is where we possibly could have gone long here. Okay, to do that, we have that the immediate price action on the weekly chart is bullish. The immediate price action on the daily is bullish sentiment as well, right? So what we're going to look is for high relative volume candles. Sorry guys, high relative volume candles happening on our B levels. All right, we can see one here, for example, high relative volume candle. Now that we know that this zone is interesting, what we do, we go to a lower time frame, right, and checked. Let's say we were going to go long over here, right, because it could have been something like this. All right, now our areas of interest, it's really for the 30-minute chart. Oh, I'm going to deactivate this as well. It's not okay. What we are looking for, an over and under pattern, right? A B-shaped pattern. Okay. Triple top, triple bottom formation. You see, triple bottom formation. The patterns that I shared with you guys, or the FTR, which is a level of resistance. Price going down, consolidating below resistance, and quickly jumping into breaking out that level, and then slowly turning down to continue to the upside. And that's what we're seeing, to be honest, on the daily chart. If we go to the daily chart, we are actually seeing this. Well, right now it's on replay mode, but yeah, this is an FTR, and it's not only an FTR, but it's also over and under pattern happening at the bottom formation of Ethereum. You see, this is our current over and under swing. We have our staggered orders here. Most likely price will continue, then decline a bit, touch this level, and continue to the upside. Okay, that's the overall pattern that I'm seeing on the daily chart. But let's go back to the 30-minute, because what we were looking over here, it's for this pattern to actually form. All right, and to see that, what we want to look at is the replay from what happened over here after the 4-hour candle closure gave us the confirmation from that high related volume zone. Okay, so what do I want to look for? It's basically an over and under. Now, how do I set the over and under, right? Left shoulder, head. Now, what I want to see is a breakout above this level, okay, because below this level, this was the high that created the low, right? And now we see it, we wait for it, right? Dun, 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 replay mode. Okay, there you have the breakout, right? And the breakout started from here. This is the last candle before the breakout actually started, right? That means that the market is going to give us, this means that the market is going to give us certain price levels where we want to focus on for the intraday charts. Okay, which are these levels? The last bearish candle, okay, before the break of market structure, the break of price structure, because we can clearly see the break of price structure over here. All right, the last candle, all right, the last candle that it's confluent with the break of structure, which is this one. Okay, and in between, okay, in between we have something interesting here as well, because not only that this candle is very relevant to us, but it developed a liquidity gap over here. Okay, so now all of these zones, all right, you see this liquidity gap, it's confluent and it's forming an intermediate zone below this. So this is the zone that I'm going to be looking for entries. Okay, we don't have any more liquidity gaps over here. And now what we're going to do, right, now that we know that we have the price structure shift, we're going to send these zones, okay, to the minute chart, to the lower time frames. And I normally trade from the 5-minute. Okay, I know my zones now. I go to the 5-minute chart. Okay, this one is only for the hourly. And what is this level over here? Intra-week higher low. All right, that shouldn't appear in the minute chart. Well, it should, but only from the 30-minute. Okay, now we have that. Now I go to the 5-minute chart, right, guys? And what I will start doing, now we keep the replay going, right? I want to see a pullback into these zones, giving me an entry level. Okay, if it's not here, then it might be here. All right, that's what I want to see. Now let's start. Okay, it's building the liquidity, it's taking its time. Nice. I love to see this price action because you can clearly see here that it's building these liquidity levels over here. What do I mean by liquidity levels? It's that it's leaving a lot of liquidity behind because a lot of people are jumping into this move, and their stops are below these levels, right? Their stops are below these levels. Now, if I continue, nice. We should see a breakdown soon. Okay, there's the breakdown. Let's continue. There's the breakdown. Market continues to the downside. Okay, now it gets interesting for me. All right, what do I mean by that? I need the previous lower high to be taken, okay, because we have interacted with the first zone of interest, and do something like this, right? The price needs to go above this, break microstructure, pull back, and then continue to the upside. Okay, so that's my level that we need market to retrace to. Let's see if it happens. Now I have a new level because you see this low has been taken. So the new level I need to be taken is this one. Okay, we have a failed auction over there. A new low has been made. And the new level I need to be taking is this one. No confirmed market price structure shift for now. Failed auction, and nope. No confirmation here. Now we have confirmation. All right, guys. Now we have confirmation, and what you do is you open fifth over here, right? From the high that made the new low, all right? From the high that made the new low. This low needs to it took the liquidity below the previous low, so that's good confluence, all right? And now this zone over here needs to be confluent with a liquidity gap as well, and we do have a liquidity gap over here, all right? Now we have two levels of entry. This liquidity gap that it's confluent with a 0.55 Fibonacci level, and also, all right, also guys, the liquidity gap that it's formed, all right, the liquidity gap that it's formed when the market structure shift, when that happened over here, right? So we have another level of entry over here, which is this one. Okay, so what I'm going to do is the following. I'm going to set limit entries over here. My stop loss is going below this level, okay, the last level where liquidity was taken, all right? And my overall take profit, okay, if I go to the 5-minute chart over here and I put the 30-minute chart over here, I know that my immediate level of profit is the next volume level, which is around 1844.5. Okay, so these take profits should have been around 1844.5, all right, for this entry over here. Now let's go back to this chart, which is the one that it's on replay. And my next trade is coming directly from this zone over here with the same stop loss, same take profit, better risk to reward. Now let's see if we should have get filled. I don't know. Okay, it seems that we almost got filled, but it didn't happen, right? We didn't got filled for a couple pips over here, but you see the confluence. I don't know why this zone is over here, to be honest. Oh, I know why, right? We have it over there. Let me see what we did wrong over here. Okay, no, everything is correct. We just got, I would leave the limit orders over there, but I'm pretty sure that the market just continues to the upside from here. Yeah, it goes up, goes up, goes up, goes up. All right, so that's the way I trade. All right, guys, obviously with more confirmations like open interest, cumulative volume delta, footprint charts, CBD, etc. But the overall scenario is this. Yeah, we lost this trade because it can happen sometimes, guys. The market is not perfect, all right, and neither do I, right? We could have lost this trade over here, but the overall analysis was completely right, and this all took from the weekly chart down to the 5-minute to understand where we are heading. Okay, guys, so to put this as an example, I took a trade, let's see if it was, yeah, I took a trade over here, same criteria, right? You can see the 5-minute chart. All right, I had two zones over here on the 5-minute. It was this one, okay, this one over here, and we had another zone of confluence around here on the 30-minute chart. So these were my two entries. This was the previous, the next bid level I was targeting. This was the last level of where liquidity was taken. All right, this is the over and under market structure shift, pull back into these zones, two levels, right? Two trades here. One here with 0.8 risk to reward and one here with 4.7 risk to reward. I almost got like 5.5 R on these two trades just by doing what I told you guys. Okay, so this is basically the way I trade. All right, now I will be taking questions, guys. Please let me know your questions. Let me know your questions. I'm pretty sure there should be some questions. Otherwise, I would be happy because that means that I explained everything right. Okay. For next sessions, we are going to see more in depth other tools that I use until finally I will eventually show you all the trading strategy itself, right? But it takes time. It takes time and it requires practice as well. Let me know your question, guys. Okay, it seems that there's no questions. Or my chat might be delayed. That's possible too. You said you enter on the 5-minute chart. Yeah, for intraday trades, I enter trades from the 5-minute chart, and for swing trades, I enter trades from the 30-minute chart, following the same exact criteria. How do finalize your area of interest? Well, it came from the 30-minute chart. If I put here, like this is the 5-minute, right? If I go to the 30-minute chart over here, I'm pretty sure that I'm going to see the overall concept of what I did, right? You see here that the 30-minute chart, on at least this chart on the KAS, right? We had an over and under with a 3 drive, right? 3 drive, over and under swing, liquidity taken, shift on market structure, right? Where does this shift on market structure was started? With this bullish candle over here, okay? Which is also confluent with this bearish candle, which most of you guys should call it like the breaker. And as you can see, in between these two, we have a zone over here, right? So if I erase this, you are going to see that in the 5-minute chart, that zone was, all right? And now in the 5-minute chart, I look for the same. When the market retraces to this level, we have over and under swing, liquidity taken, market structure, price structure shift, and pull back into the zone. All right. I highlighted this one as well, but the overall trade idea was over here, and then trade. You see, that's how that's my areas of interest, and you will have several areas of interest. Sometimes I have like 3 areas of interest where I look for trades, and sometimes you are going to get false signals. Like for example, let's say we have an area of interest over here, right? And then you have your trade, let's say your stop loss was over here. You might likely get stopped out. Then it comes to another area of interest, right? You enter your trade, your stop loss is above here, you get stopped out. And in the last area of interest, your stop loss above here, right? And then you get 4.6 risk to reward trade. What does that mean? That not only you covered for the 2 losses that you made here, but you end up in profit. That's what trading is about, literally. All right. So I don't care about the 2 losses that I incurred on this particular example, right? I don't care about them because I know that eventually I will be profitable with another trade. And that's literally what happened. Okay, guys? Do you guys have any other questions? Please let me know. This is basically the recap of what we have seen in the previous 5 or 4 sessions, I think. So it would be nice to have some questions, guys. Otherwise, I would understand that you have understood everything. Awesome, man. Awesome that you have it well understood. All right. That's amazing. The goal is for you guys to go ahead and do the same with your coins, right? I see you highlighted Sol, Sui, Dot, Ton. All right, go ahead and do it on your own. You have all of the videos, and that's why I'm doing this recap, because now I'm joining all of the concepts that I have taught and into one single video, so you guys understand why I do what I do. All right. How do I control my emotions when intraday trading? All right, that's a very hard question, but what I would recommend is you to start with swing trading. Okay, don't go below 30 minutes. Don't go below it. Okay, this is going to help you a lot when you start, because you need to develop patience in the market. You see, in this particular example, until I got filled, I was in drawdown. Okay, I was in drawdown for about an hour and 5 minutes over here, and since I opened these limit orders where it was around over here, I had to wait around, it was 3 hours, and for this one 4 hours, 3 hours and 4 hours for my trade to get filled. Okay, and for my trade to hit take profit, it was around 6 hours. So this is why it's called intraday, right? Because normally trades don't last more than a day. But for swing trades, you're going to develop patience because your trades are going to last more than a week, right? Even there have been some times for me that I have set limit orders, and these limit orders haven't been filled in like a month or so. Okay, so I would suggest to start with swing trading. That's the way I did. I actually started scalping. Okay, when I began trading, all right. But then when I started realizing that it was very difficult, because guys, intraday trading and scalping is extremely difficult, I started going through my higher time frames. All right, that's when I developed this strategy on higher time frames. And it was easy for me to start applying it every single time I saw a trade. And I just opened the order, set my alerts, and I waited for the result, because I can't control the market. That's something extremely important to understand. You can't control the market. And not because you are looking at screens 24/7, it's going to mean that if you look at the screen, like, I don't know, from another perspective, price action is suddenly going to change. It's not that way. You can't control the market. So the more mechanic you do, okay, the easier you're going to get the results. All right, guys. Are you always waiting on your screen, or do you step away from the screen and wait to fill? Yeah, I normally don't wait on the screen. I set my trades, I set my limit orders, my alerts, and then I walk away. Yeah, sometimes because I do other things on my laptops, right? You know, like I do content, I do these live streams, I do many other things. I also have another job, etc. I have my own brand, and I'm sometimes looking at the screen, but that doesn't mean that my criteria is going to change. And that doesn't mean that if I look at the screens harder, the market is going to shift direction. All right. What's the purpose of the hourly time frame when it comes to trading? Not really any purpose, brother. To be honest, time frames, like I have repeated many times before, are irrelevant. Right? I can do these from like 10 hour, 1 hour, 30 minute, 45 minute, 55 minute, whatever. Time frames are irrelevant, right? Because at the end of the day, what time is representing is price. So what I do care is about price. Okay, so the hourly has no significance. What do has significance in time frames is how many people use them, and that's why there are certain time frames that are more popular than others. You see, it's very unlikely that you're going to see someone trading on the 3-minute chart or in the 13-minute chart or something like that, you know. But it's more likely you to see trading someone on the 5, on the 15, on the 30-minute, on the hourly, on the 4-hour, on the 12-hour, and so on. Okay, why does this matter? Because the more people is looking at that time frame, the more people is looking at what you are looking, and they are going to react possibly the same way that you are going to react, or in the opposite way, which is why I'm teaching you guys to think this opposite way kind of view. All right, how to combine it with higher time frame to lower time frame. All right, yeah, that's basically a very good question. You can do this way. Okay, for swing trading, you can use the weekly chart, the daily. Well, we can call this swing trading for like intro week, all right? Because swing trading, you can actually use the monthly, all right? Weekly, daily, 12-hour, 4-hour, until like 30 minutes or so, and all of the time frames in between. That means that you can, instead of using the 30-minute, you can use the 1 hour, the hourly chart, all right, and so on. 30-minute, that's for swing trading. And for intraday trading, like intraday trading, you can use the daily, 12-hour, 4-hour as well, 30-minute, 15-minute, and 5-minute. Okay, and sorry, for scalping, you don't care about the overall trend, right? I see some people using the daily for scalping, but to be honest, it makes no sense, because if I'm trading on the daily trend but I'm taking swings on seconds or going against the daily trend, that's fine, because it's scalping, right? So I would say for scalping, you just delete the daily, right? And you can use something like this, like 12-hour, 4-hour for the overall trend. Try to find setups on the 30-minute and zones for the 15-minute as well. Then you can go to the 5-minute chart to confirm such scenarios, and then trade from the 1 minute, okay? Or second charts, or tick charts. Okay, type your IG, bro. I don't have Instagram, brothers. Oh, yeah. You can follow me on X, right? On Twitter, as past the code. There you have it. You can follow me on X. With this over here, I don't have Instagram. All right, guys. Do you have any more questions? I like this, the mood that you're having right now. Razak, I'm lost. I understand, brother. It happens to us all. I would suggest you start looking at my video series from the scratch. All right, you can start from video number 1, video number 2, and so on. I think this is the 6th one that I have done, so you will have more understanding of what I'm talking about as soon as you understand the previous videos. And if you do not understand something in a video, please make sure to tag me on the Telegram, and I will be I will be answering you over there. Okay, guys, any more questions? Because basically this session is done. Yeah, it's all over. You said every high volume node is a point of control. Can you expand on this? All right, perfect. Nice question. This is the daily chart, right? Yeah, let's leave it this over here. Now, you see, if I highlight all of the high volume node tops, there's one over here, this one, this one, this one, this one, and this one. And now on the PVP, right, what I'm going to do is put one bar, extend POC, right? We're going to do this from the weekly perspective. Most of these naked points of control are going to be directly correlated with high volume nodes, you see? That's why I'm letting you know that mostly, like most of these high volume nodes end up to be points of control. And why is that? Because in every single high volume node that we have here, right? Why is it called points of control? Because that's where the market was controlled the most time, where most volume happened. Okay, this is where the most volume happened, and that's the concept of a point of control, where most volume happened. All right, and not only from a naked point of control view, but also from a simple point of control, right? To avoid this mess, right? To avoid this mess of a lot of points of control that we don't like to see, right? We can put it on the daily as well if you want. You see, and this is when you're going to see that most of these levels are aligned with high volume nodes. But I don't want to see this mess. Right? I don't want to see this mess. So that's why I don't use that, and instead I understand like every single one of these high volume nodes, right, is telling me something, and is that very likely market is going to range when it gets here. You see, high volume node, consolidation, high volume node, consolidation. If we ever break out above this level on this high volume node, it's very likely that price is going to consolidate over here, you know? So I don't care where the naked points of control are. I use them all. Use them all. Okay? Awesome, guys. Any other question? Any other question, guys? Let me know if this session was useful. That's where you grow. Switch to the charts and analyze with what you have learned. Exactly, man. Exactly. When you are confused, when your head's spinning, right? That's when you start learning. That's normal. Thank you, Brian. Awesome, David. Thank you for your feedback, man. Appreciate it. Thank you, David, as well. Thank you, man. Appreciate it. So hopefully this is very useful to you guys. This is the way I trade. Obviously, I have a lot of more explanations to do, and we will we will search for them in the next sessions. Right? So, guys, that would be all for today. Thank you, Reddy, as well, for being here. Thank you, everyone, for being here. It's a pleasure always. And if you guys have any questions left, please let me know. You can tag me on the chats, like at Bast on Telegram as well. Telegram is the same, Bast the code. You tag me there on Gem Hunters chat, and I will be answering your questions. All right. Try to not privately DM me. All right, because I know you guys might have some questions, and it will be good if you guys ask these questions, and everyone gets feedback from it. All right. Awesome, guys. Nice to see you. Bye bye.